This is Przemysław Radomski, CFA, talking to you on Saturday, November 6th. In today's video, I'm going to talk about last week's rally in gold, in particular on Friday, and what it changes for the outlook for the following weeks. Well, let's start with gold's weekly chart. And on this chart, we clearly see that gold first moved lower, but ended this session higher. Usually people view rallies, especially weekly rallies, as something bullish. So and indeed, we saw a rally. Gold move almost $33 higher last week, almost 2%. So what changed? Well, actually nothing changed. And why nothing changed from this point of view? Because once again, gold closed slightly below its 60-week moving average. And before you say that 60-week moving average is not important, please note that it already proved to be important numerous times in the recent past. I'm marking these cases right now, but there are also other cases where this moving average served as important support. It was approximate support also in early 2020. So this moving average does appear to be quite important. And the fact that gold made two attempts in the last 2 weeks to rally above it and failed, well, it's also quite telling. What does it tell us now? Well, it tells us that not as much change as it seems at the first sight. But that's not the key thing that you can see on the weekly gold chart. What you can see that is more important is that gold is right now on its triangle vertex-based reversal point. I mean, the declining dashed resistance line based on the August and January highs. This line, I marked it with the dashed line, crosses the support line based on the previous lows. I mean, the May 2019 low and the August low. And well, it crossed, these lines crossed each other last week. What does it mean? Well, it means that we're likely to see some kind of reversal now. What was the most recent move? It was to the upside. What does the reversal imply, therefore? A move lower. So the implications are bearish. Is this something that's worth paying attention to? Yes, these triangle vertex-based reversals have worked numerous times. You can also see other cases right on this chart. For example, the early August bottom was very close to the analogous indication, right? Here's the turning point, here's the reversal itself, and also the early September bottom. I mean, late September bottom, sorry. It was relatively close to the triangle vertex-based reversal point. Consequently, last week's rally in this context is not as bullish as it seems. In fact, it's not bullish at all. And well, triangle vertex-based reversal is something that is important from the week-to-week point of view. But if we zoom out a bit, we'll see that gold is actually at its very long-term turning point. These turning points happen about every 2 years, and as you can see, they proved to be quite important previously. Last year, it was not right at the top, but relatively close to it. In 2018, it was relatively close to a top. Also in mid-2016, there was a local top in 2014. And of course, early 2013 marked also a major top. It was local top when viewed back then, but as it turned out, that was the final short-term top before the decline accelerated. And given numerous other similarities between now and 2013, this makes this confirmation and this turning point makes the situation even more similar to early 2013. So the implications are indeed very bearish right now. As the most recent short-term move was to the upside, the implications are bearish. And these two reversal indicating techniques, cyclical turning point and triangle vertex-based reversal turning point, they confirm each other, making the reversal even more likely. And having said that, let's take a look at the mining stocks. Are they showing strength here? Where on a day-to-day basis, that might seem to be the case. They moved 3% higher on Friday, I mean the GDXTF. But did they move above their October highs? No. Did they at least move to above its mid-October highs? No. Gold moved above both highs and GDX didn't, so GDX still underperforms gold. What is more, please note that there is also a short-term similarity between the current situation and what we saw in mid-June. After the initial decline, there was a comeback, and also after initial decline, we see a comeback. Now the comeback is bigger, but also the preceding decline was bigger. So it's quite natural to see a counter-trend upswing that now is bigger, but quite similar on a relative basis. Volume confirms it as well. I previously already commented on that. Well, indeed, we saw a move higher, then back down on an intraday basis. The volume was high prior to that, but now the sign is even clearer, and it makes the situation even more similar to what we saw in the first half of June. Back then, gold did not move to new highs, but it did rally significantly after the initial decline. Right now, gold also rallies significantly after the initial decline. Well, it did move to new highs, back then it didn't, but the history is not likely to repeat itself to the latter in each and every case. It is likely to rhyme though. And the key thing about the similarity, I mean, miners' underperformance, remains intact. So what we see right now, also given the reversal points in gold, it seems that gold's rally will end tiny breakout above the previous highs might be similar to what we saw in early September, the tiny, well, not so tiny, but a breakout above the previous highs. Also what we saw in August and late July, because these were actually tiny attempts to rally above the mid-July high. And quite similar to what we saw in early June. In this case, we didn't see a move above the previous highs, but in those cases we did. So should we really trust gold's breakout? I mean, in this case GLDs, but it means effectively the same thing in this case. Not really, especially not in case of those reversals on gold charts. And given GDX, meaning mining stocks, weakness. So even though Friday's and last week's rally in general might give this bullish impression, might make one feel, note the word feel, that another major rally is taking place in gold. Putting emotions aside and looking at the facts, we see that, well, miners are underperforming. What we see now is similar to what we saw in the past. And there are many more confirmations of this of the bearish case, including but not limited to the reversal, the triangle vertex-based reversal, the long-term cyclical turning point. Again, this rally at the end of last week, well, this week, it's Saturday here, right now, might have made you feel bullish. But, well, feelings are one thing, and, well, the emotions and bullishness, the feeling itself is at its highest at the tops. That's exactly how and why tops are formed, because everyone gets as excited as they can get, and they buy. And when there are no more buyers left, the top forms, and the prices fall. So, in general, trusting the initial feelings in case of capital markets might not be the most profitable thing to do. It's usually best to focus on the context, on what's logical, on what's on what comparison to previous cases, without putting the emotions aside, what it tells us. What I'm not saying is that, well, if someone is bearish, is that they are illogical. I just want to say that acting based on emotions is not a good idea in trading in general. I'm not saying that I have all the answer, that I've been correct about the market in each and every case, that I will be correct in each and every case. Nobody should be able to promise that, definitely not myself. But based on what I see on the charts, based on what I told you, based on those 3 charts alone, and please note that these are just 3 charts. The full version of the Monday's analysis will include over 40 of them, including fundamental issues and so on and so forth. But based on these 3 charts alone, the outlook didn't change. It remains bearish. So I'm reporting to you exactly what I see right now. So summing up, the outlook for the precious metals sector remains bearish for the following weeks and months, despite the last week's rally, especially the one that we saw on Friday. Also, if you're not yet my premium subscriber, I strongly encourage you to subscribe and read the full version of the analysis. On Monday, you also get to know my trading positions, my views on them. And if you're not yet even on my free mailing list, I strongly encourage you to sign up for it, because it includes 7-day free trial of my premium gold and silver trading alerts. And well, you probably enjoy what you get in those full version analyses. Thank you for watching. Enjoy your weekend. Enjoy the entire week. And on a final note, everything that I'm saying here is just my personal opinion only. It's not investment advice. Please read the disclaimer below the video. Thanks again. Bye-bye.